Hello everybody, good morning, good afternoon, good evening, whatever time you're watching this. We are on the last step of getting you guys through the law, business, finance assignment. So what we're going to do is we're just going to basically read through the questions of the assignment. I'm going to give you guys some pointers, just things to watch out for, and hopefully clarify a few things. There's a certain number of things that might not be that obvious from just reading the assignment itself. So yeah, we're just going to do a read through question 1, 2, and 3 in this section, and then question 4 we will do separately. Okay, so I'm going to share the assignment with you guys. Where's Word? Oh, there it is. Right. Okay, so let's start to read through this. Firstly, it says the assignment consists of 4 questions. Now that sounds very obvious, but a lot of people actually miss questions every year. So they will do the assignments perfectly, but then miss 1 or 2 of the questions. So make sure you do all 4 questions and that you read all 9 pages. Okay, all questions are compulsory and have to be answered in full, so you can't pick which questions you want to do. Okay, compile it neatly, preferably using spreadsheet software. Yes, Excel would be the best to do it. All the formats that we did throughout the various sections was given in the lecture itself, so you can just stick to those formats. Also remember to, whatever software you use, try and convert it to, well, not try, and it's compulsory that you convert it to PDF before uploading it. Okay, the assignment consists of 100 marks, so you need to get 50 to pass this. Okay, now this part is important. In order to obtain a mark for a transaction leg, so this is basically any general ledger or ledger that we do, the following should be in place. The accounting entry has to appear under the correct account name. So the T account has to have the correct or something very similar name to what the mark plan says. The accounting entry must be correctly allocated to the debit or the credit side. That's obviously very important. So if you do it correct, but it's written in on the wrong side, no mark. The contra account indicated has to be correct, and the rand amount of the entry should be correct. So when we did the ledgers, there was the section where you guys had to write the name of the account that you are posting to in this ledger, and it has to be like that. So this is not either or, this is all of these things. It has to be in the correct T account on the right side with the correct description and the correct rand amount to get 1 mark. Any of those things are missing, you are not going to get a mark for it. Okay, there it says, it emphasizes that if any of these aspects are incorrect, no mark will be awarded for the specific answer. Okay, where specifically indicated that VAT is applicable, VAT is at a rate of 15%, so we did that in the assignment, in the lectures. Should the amount applicable to a transaction include cents, round off to the nearest full rand. Okay, so no cents in the assignment. Okay, let's start with question 1. I just want to open it on my side where I've made some notes. Okay, so before we start with question 1, I'm going to scroll down. I first want to go through the required so that we know what they're going to expect of us, and then we can read the question itself with a bit more knowledge of what we are aiming to. Okay, so it says you are required to draw up the trust ledger accounts for the clients for the month of July 2021. Okay, so they are not asking us for the trust cash book, they are only asking for us for the client ledgers relating to the client's trust transactions. Okay, now on that, my first note and tip for you guys. If I was you, I would draw up a trust cash book, even though there is no marks for that. So the trust cash book, you know, it's a T account. If the bank balance increases, it's an entry on the debit side. If the bank balance decreases, it's an entry on the credit side. Okay, so once you've got the trust cash book drawn up, then I would simply go and post that trust cash book to the various client accounts. And that is ultimately where you are going to get your marks from. So in my opinion, do a trust cash book. You don't even have to upload it. And there will be no marks for it, but I think that will form the basis and help you to very or much easier get draft the client accounts. Okay, so let's go back to question number 1. It says you are representing Mr. Ray Williams in a divorce case. Mr. Ray Williams deposited 50,000 Rand in your trust account on the 10th of July. So immediately there we know there is a cash book transaction. The following expenses are incurred on behalf of Mr. Ray Williams. The advocate's fee for 10,500. Now there I want you to make a note and say, except that that is paid. Okay, so that's not just receiving the invoice from the advocate, except that you pay it on that day, on the 21st of July. Then fee for drawing up contract, 26 July, 6,000 Rand. Okay, now at this point for that line, we don't have enough info. So let's read this section here, which will be applicable to the drawing of the contract. It says you agreed with Mr. Ray Williams that you will make the following transfers to your business account. 50% immediately. So that means 50% of the 6,000 Rand there gets transferred from trust to business immediately. And then they say 50% when you finalize the settlement agreement. Now I've gone through the rest of the assignment and the mark plan, and I cannot find that the remaining 50% has been transferred to business. In other words, this settlement agreement does not conclude in this question. So you're basically going to transfer 50% to business, and the remaining 50% will stay in trust. It doesn't finalize in this month. Okay, then we've got an invoice for on the 30th of July for 25,000 Rand. This invoice is for representing Mr. Williams in a divorce settlement discussion and court attendance. So just to make it clear, this year is linked to that fee. This 50% is not applicable to this invoice. This invoice, the further detail is given below it. So then it says reconcile the account, transfer the funds to your business account, and refund the outstanding amount to Mr. Ray Williams. So basically what you are going to do is you're going to transfer this full 25,000 Rand to your business account, and whatever is then remaining in Mr. Williams' trust account will then be transferred back to him. Okay, but that's still rather simple. It's all just in and out bank transactions. Okay, let's read number 2. There. Mr. Earl Anthony deposited 50,000 Rand in May 2021. Now note that we are doing the accounts for July 2021. So whatever he deposited in May will be an opening balance in July. So you don't capture that actual transaction, you bring it in as an opening balance. For legal action against Ms. Lisa Wagner, Ms. Wagner settled out of court and refunded Mr. Earl Anthony 15,000 Rand for the fees he paid for the slimming products. Now, even though they settled out of court, this 15,000 Rand gets paid into our trust account. Okay, they handle that as such. Mrs. Lisa Wagner also paid 15,000 Rand for damages and 7,500 Rand to cover Mr. Earl's legal cost. the 37,500 was received from Ms. Lisa Wagner on the 23rd of July 2021. Okay, so all of those three amounts are just simply amounts that get paid into your trust account, and you've just got to allocate it to the client's ledger. Your fee amounts to 18,000 Rand. You transfer your fee on 30 July, reconcile the trust account, and make payment to Mr. Earl Anthony. So that's also relatively simple. So all the amounts come, there's an opening balance of 50K, all the amounts come in, you transfer your fee to business, and whatever is remaining on his account, you transfer back to him. Okay, so number 2 I also think is relatively simple. Then we get to number 3. So my first note on number 3, you'll see that is a conveyancing matter between a Miss Laurie Nichols and a Mr. Norm Duke. So in the mark plan, the way that they want us to answer this is they want separate T accounts for the buyer and for the seller. So you're going to have a separate T account for Miss Laurie Nichols and a separate T account for Mr. Norm Duke. Okay, so let's read through number 3. Miss Laurie Nichols sold the house to Mr. Norm Duke for 6.5 million. Mr. Norm Duke secures a home loan of 6 million to finance the house. Miss Laurie Nichols, okay, so up to there's no transactions, that's just info. Miss Laurie Nichols deposits 25,000 Rand into your account on the 30th of June 2021. Now again, that is the month before the month that we are doing, so that will also be an opening balance to cover clearance certificates and other costs. Mr. Norm Duke delivers a check to your office for 750,000 on the 4th of July. Remember, when we receive a check from our client, we've got to account for it on the day that we receive it. So you'll see the next line reads that, or tells us when the check was deposited. That does not make any difference to us. We account for it in our ledger on the 4th of July, the day that we receive the check. Okay, so then we deposit it into our trust. The 750 is to cover transfer fees, municipal account, levies, and your fee. Mr. Norm Dukes requests that you invest the funds paid into your trust account in an investment account. So you've now got to open a separate client ledger for the investment. So it's going to be called Mr. Norm, it's him that deposited, Mr. Norm Duke, section 86.4 investment. Okay, so you don't have to do the debit side, the bank side of it, you only have to do the client side of it. And we transfer the monies there. Then on the 10th of July, the check is returned, referred to drawer. So that means that we've got to reverse the transaction originally captured in the trust. And also, the moment that check bounces, we've got to withdraw the funds from our section 86.4 investment account, because we can't leave it invested there and then have a shortfall in our trust. So we must immediately repay the funds back to our normal trust account. Mr. Norm Duke transferred 500,000 to your account by EFT on the 20th of July. Okay, so that's just a normal cash transaction. And then I can tell you as a note, you've got to go and invest that again. So you do exactly the same as what you did with the 750,000. You transfer the funds from the investment account to your trust account on 29 July. So that means you've already invested it and you are now withdrawing the investment back into your trust. Interest earned on the investment account amounts to 6,700. So in the lecture, we have dealt with that. You should know how to process that. And then the property is registered on the 30th of July. You pay the following amounts on behalf of Mr. Norm Duke on 16 July 2021. So we paid the transfer duty, we paid the pro rata levies, and we paid the municipal account. So that's all relatively simple. And then you are entitled to your fee of 45,000 Rand, but that is only on registration date. So make sure you get your dates correct. And then we've got to pay the following on behalf of Miss Laurie Nichols. So we pay some municipal charges for her. Sorry, let's just move down. So you pay some municipal charges there and some pro rata levies of 7,500. And then it says reconcile the accounts for Mr. Laurie Nichols and Mr. Norm Duke. So there I've got a note to say the balance of the purchase price, because the purchase price is 6.5 million, and the guarantee that he receives, or the bond that he got, is only 6 million. So a balance must be transferred via a journal from Mr. Duke's account to Mrs. Laurie's account. There's a journal between the two to make up the balance of the transfer price. Okay, and then to reconcile the accounts, we've got to add up both accounts, see whether they've still got money on hand in the trust account, and if they do, we need to make payment to the clients for the remaining balance on their trust. Okay, so again, then they just ask us to draw the client ledger. So I don't think this question is very difficult. I think it's a very easy question. The one or two funnies or the one or two things that's unclear in the question, I think we've just handled and I've explained. So yes, my advice, do the normal trust cash book in total so that you know what all the cash related transactions are, and then you go and do the postings, and then after you've done all the postings from your trust cash book, there's one journal that needs to be done between Mrs. Nichols and Mr. Duke. Okay, let's move on to question 2. So let's first go and again read the required. So if we page down, it says you are required to prepare all the relevant accounting entries related to the statements above in the following records. Okay, so we need our books of prime entry, a business cash book and a trust cash book. Our general ledger, they say it is necessary to prepare a VAT control account, but it's not necessary to prepare control accounts for debtors and creditors. Now, don't let that confuse you. You still have to do all your clients' accounts. It's just the control account where you combine all of them that they are not asking for. Then we need our business debtors, our client ledgers for business, and our trust creditor ledgers. Okay, then notes should amounts include cents, please round off. Right. So at this point, to avoid confusion and avoid you not doing well in the question just because you're unsure of which accounts are needed, I'm going to now tell you, you need the following T accounts to be able to successfully answer this question. You are going to need a business cash book and a trust cash book. That's simple enough. Then on client ledgers, we are going to have correspondent bulls, trust creditor, correspondent bulls, business debtor. We are going to have our professional fees, the income account. We are going to have collection commission, and we are going to have a VAT control account. So you need 1, 2, 3, 4, 5, 6, 7 T accounts on your answer sheet to start this off in the correct direction. Okay, so let's go back to reading through the actual question. You own the firm Stormers Attorneys operating from Cape Town, and we receive instruction from your correspondent Bulls Attorneys operating from Pretoria to see to a collection matter. You instructed to recover debt of 1 million rand from Mr. Du Toit. That is only information. It doesn't say that we have successfully recovered that. It says that we are instructed to recover 1 million. On behalf of your correspondence client, Mr. Nyakane. Right. Then it says you draft the following statement to Bulls Attorneys on the 23rd of April. So this is now our statement to them. Okay, now there's all the details. I'm not going to focus on that. Let's get down here. Collected from Mr. Du Toit. So we have successfully collected 950,000 rand. So you can instantly go and make a note next to it there and write their cash book. This is a cash book entry and we can accept that that happened on the, I think it's on the 23rd of April. There's a cash book entry where we receive 950,000. Then from that, we are going to deduct our fees for issuing a summons and our collection commission. Okay, but now there's a correspondent allowance. So we must first go and read how much that correspondent allowance is before we can complete those two question marks there. So let's just go and have a read through this. It says Bull's attorneys are granted a 15% correspondent allowance. So let's immediately go back here to that question mark. Now I can't give you the actual answer, but I can tell you that that is subject to correspondent allowance, and that is subject to correspondent allowance. So if you add those two amounts together and times it by 15%, you are going to get the answer that you must fill in the correspondent allowance question mark there. Okay, and now if we've got that one, this proof of electronic fund transfer is basically our balancing figure. So if we've got all of the info for those four columns, you basically add these two together, subtract those two amounts, and that gives you the answer there. Okay, so I just quickly want to go back to this one here. So our fees for issuing a summons, that is a journal entry. So we are going to, it's going to affect our client account. We're going to take the VAT portion out. Remember, this amount here is including VAT. So you've got to take the VAT out to the VAT control account, and then the balance should be allocated to professional fees. Collection commission works exactly the same. So on your collection commission, you're going to debit your client accounts with the inclusive of VAT amount, split out the VAT, and your balancing entry will be collection commission. Now, your correspondent allowance isn't as simple, but we've handled it in the lecture. So we're basically going to decrease the amount that our client owes us by the amount that we've calculated there. It's going to affect my VAT control because it's lower fees that I'm going to receive because I give 15% away. And then also there will be a split to the two ledgers accounts where your collection allowance or your correspondent allowance gets allocated to, because 15% must be allocated to your fee ledger and 15% allocated to your collection commission ledger. You can split this up into two transactions if you want as well. You can split your correspondent allowance into two separate transactions as well. And then again, here we have a proof of electronic fund transfer. So make a note, this is immediately a cash book transaction where you pay out the balance of the client's account to your corresponding or your instructing attorney. Okay, so that should, it's a mouthful, but it's relatively simple. If you get that and that right, those two question mark amounts, then it should be relatively simple to do this. So let's just read through the rest of it. Bull's attorneys are granted a 15% correspondent allowance on all income. So again, I've said the 15% is applicable to both of those amounts. Attorneys as a direct result of services performed with regards to the above matter, in line with the signed agreement between the two firms. Both firms are VAT registered, and Stormer's attorneys pay the VAT liability. So make a note here so that you don't forget to do that. So all that you've got to do is at the end of your, after you've captured all of the above transactions in the various ledgers, all that you've got to do is work out what's the balance on your VAT control and do a business cash book entry against your VAT control to go and zero the account out. So don't forget, because that's a bonus, very easy mark to get there. The balance per the bank reconciliation statement for Stormer's attorneys was 23,000 at 31 March 2021. There were no reconciling items. So all that they're giving us there is they are telling us what the opening balance is for our April business cash book. Okay, and then we already know what's required. So This one again, I think the tricky part might be just to calculate those two amounts, but the moment you have those two amounts, the rest of the questions should be relatively simple. So as a note, you don't open a ledger for Mr. Du Toit or Mr. Nyakane because they are not your clients. You open only a business and a trust ledger for Bull's attorneys because they are your instructing attorneys. Okay, that's all I have on question 2. So let's move on to question 3 and have a read through that. Okay, so let's go straight down to the required section. It says you are required to draw up a budget and a cash flow forecast for December 2021 in column format. List each income and expense item separately. Right, so that's very simple. That's exactly what we did in the lecture. It's only for 12 months. So my first comment there is this is for an entire calendar year. So you're going to have 12 months, 12 columns starting January 2021 to December 2021. Okay, this column here, I don't know, this is almost more confusing than what it actually helps. You've got the format in the lecture that we did. Please use that exact format. Don't change from that. Okay, let's have a read through. What have we got here? In preparing your budget and cash flow for the year ended 31 December 2021, the following information was received from your accountant. We have an annual expense for bonuses, for staff bonuses. So remember what we learned, the expense, the budget side of it needs to be equaled out over the number of months. And in the cash flow, the full amount will flow out in the month where you physically pay your bonuses. Okay, then monthly expenses. We've got salaries, rent, telephone, internet, monthly copier rental, office expenses, and marketing. So we'll have a read through. Most of these ones should be exactly the same in the budget as what they look like in the cash flow. We will just read on and see if they give any information that any expenses are paid in advance or in arrears. Otherwise, all of these ones will look exactly the same in the cash flow and in the budget. And then we've got depreciation. So when we did the lecture, told you guys we don't go to the bank and physically pay our depreciation. So if it doesn't affect the bank, it should only go in the budget. So let's just have a read through the extra information. Due to the effects of COVID-19, the entity chose to move to a smaller premises. A contract was signed for new office premises from 1 August 2021. Okay, so that means that this rent year will be applicable until July. And then from the 1st of August, we will read now how much the rent then becomes. A deposit is payable in the amount of 30,000 Rand. So remember, deposits that we pay and receive back is only cash flow items. And the monthly rental is 25,000. So this 32,000 will basically decrease from August to 25,000 Rand. You are expecting to receive 15,000 deposit refund on the 15th of September 2021 for the previous premises that you rented. Okay, so again, that and the deposit that you pay will be handled in the same manner. It's not an income or a receipt. It's not an income or an expense. It's merely a cash flow item. Okay, bonuses are provided for monthly and payable in December, so that we already know. Now we just know that the full 60,000 will flow out in December. Okay, then on an invoicing level, you invoiced 100,000 Rand on a monthly basis in 2020. You are planning on increasing the monthly invoicing with 5% from March. So Jan and Feb will stay 100,000, then from March it will increase by 5%. And then in August, another 5%. So then you've got to use the March figure and increase that by 5%. Debtors pay on average 80% of the invoices during the month of invoicing. So in the month where, so in January, you have 100,000 Rand income. So you will already in January have 80,000 Rand coming in, and then the balance of 20% will come in Feb, and then you will just follow that through. And then it says your bank balance on 31 December 2020 is 20,000 Rand. So that basically tells us that on my cash flow forecast, the opening balance on my bank. So we will use that for our cash flow forecast. Okay, so they did not say anything about any of these expenses, these ones here, being paid either in advance or in arrears. So, in my opinion, for both your cash flow and for your budget, these items can all be shown in the month. The expense and the cash flow can be shown in the same month. So again, this one I think is almost easier than the one that we did in the lecture, so you shouldn't have any problems with this. Yeah, so up to here, I think question 1, 2, and 3 is very reasonable and very, very easy for that matter. As long as you read through each item line by line by line and make sure that you get each expense, you should be fine in getting your marks here. Okay, so question 4, I've had some queries on. I've had a read through question 4, but there's certain items there that I think needs to be updated, or certain numbers that I think needs to be updated that don't make sense. So I'm waiting for the guys to get back to us on that, and then I will upload a lecture for question 4. Okay, in the meantime, have a go at question 1, 2, and 3, and all of the best.